Just hang on.
I make you I make you as a co-host,
Okay.
and you can share your charts, and then we can start.
Okay. Hang on. All right. So basically, Benny, well, first, I just wanted, I realized that this was available with a subscription, right? And
Yeah.
haven't really been taking advantage of it. So I just wanted to make sure that I pick on your brain every month. So that
Yeah, sure. You're
so
welcome. You're welcome.
I have to admit, Benny. I mean, the class was I've taken two of your classes, two on-site classes. First one was in 2018, and the last one was in 2019. But I was working then, so I couldn't focus on trading. I actually quit back in late 2019, and that's when I started. And by then, I had to relearn everything again. What the top down analysis that you taught before. So maybe we can go to let's say G. So basically, I do this the top down analysis from monthly. First, establish the trend,
Yeah.
right? So for example, for GBP USD, I see um, that from a monthly perspective, this is a downtrend, right? Going down to weekly. For me,
Wait. Before you go down to weekly, now I want to go back to Monday again.
okay,
Okay,
right,
can you show? Can you see that the reason you see that it is in a downtrend is because we can see that it continuously making a lower high, lower low.
lower high, yeah, lower
Okay,
high and lower low.
exactly.
Yeah,
But until to the last part where in 2020, you can see there's a dip lower 2020.
yeah, 2020. This
You
one.
can see that yeah, that candle. Can you see that
Yeah,
candle make a dip, right? And then immediately after the dip, of course, this is a monthly candlestick, and what we saw is the price start to move higher.
right,
Okay, so in this after take this into consideration, we can say that Monday is downtrend, yes, but it looks like things might be changing, right? So this is something that we have to remember. Not we don't just say that money is a downtrend, because when you look at the money downtrend, you are looking at year 2000, but now we are 2021.
right.
Do you understand what I'm trying to say here?
Okay. Yeah,
Yes, we are in a downtrend in the kind of a 20 years time frame, right? But in the current conditions, it looks like there's a change in the sentiment, right? And what is the change? We see there is a stop hunting there. That dip lower is clearly is a stop hunting, because immediately after the dip, we saw the price move higher, and the price did not make a lower low. Okay, so we can see there's a sense of changing right now. Okay, but we are not yet confirmed it's the uptrend. It is still a downtrend, but it just that it looks like there's a shift of sentiment.
okay.
Can you understand what I'm saying?
Yep.
Okay, continue.
Okay. All right. So going down to monthly and then weekly, we see the same sentiment. Although, as you mentioned, it has become how do you call it, a consolidation, right? At this at a lower time frame, right? But again, this is still a downtrend from a week from a weekly view,
Okay.
and then from a daily view, uh, uh, I I mean, looking at this. Sorry, I was just looking at this particular uh, section, and it has become an uptrend, right?
Yeah.
So at one H, at what day one, at one day, I I saw that this was already an uptrend. From a 4 hour perspective, uh, for me, this is still a downtrend, but again, it's changing because the it's for me, it's just a downtrend because but the lower the high sorry the higher high is not confirmed, right? So it's still doing a lower high and lower low, right? but again, it's an indication that things might be changing. And
You can
then
see that there's a break of a previous high. Can you see?
yes, here, right?
So yeah, when you talk about uptrend, downtrend, now one of the method that we use is to breaking of the previous high. In this case, previous high. Then we consider that the previous trend is break, and now we are in a bullish trend. So clearly, in the 4-hour time frame, it is already break.
Right. Okay. Okay. Got it.
Right, because now the price already make a higher high, a high which is higher than the previous high.
Okay. All right. Right.
So 4-hourly is already in an uptrend.
Okay. So that's the because I just said that it's in a downtrend because I just remember what you said, that as long as it's not confirmed, meaning I don't see a lower low, I don't see a higher low, then
you get it wrong. When not yet confirmed, you don't see a higher low. If that, okay, let me see whether I can draw something here. When we see the price start to make a higher high, in this case, it take out the previous high. We say that the market showing sign of bullishness. They want to go higher. Okay,
right.
When this happen. Now, then what you are confused right now, I think, is this. If we have a high, a low, a higher high, another higher low, but the price until now you put like this. Here is the current price. Now, in this case, this higher low is not validated because he has not make a higher high. Okay, that's what I meant. When this higher low is not making a higher high, then this is not a validated higher low. This is the one that is a validated higher low. You follow me?
Okay.
Okay, so I think there's some confusion there. But in this case, we can see clearly that this high already taken out.
Okay.
All right. So obviously we are in the bullish trend in the 4-hourly time frame.
Okay.
Yeah. You follow, yeah?
Yeah. Yeah.
Okay. Let me continue.
Okay.
Something here.
So I think we just remove this.
Yeah.
So okay. So as I can see, from the 1 hour time frame, it's already an uptrend.
Yeah.
Right. So and even so, at what I do at 1 hour, so that's when I form my bias, right? And then I look at starting from 1 hour. I look at the range that I want to.
Okay, can I stop you for a while here, Dominic?
Okay, sure.
Now you can see that first of all, you have to decide what time frame are you going to trade. If you're going to focus on 1 hour time frame, then there is no point to start from the monthly, weekly, because you are wasting your time there. Because if you are trading on 1 hour, most likely you are likely to trade on the entering on the maybe on the minutes chart. Unless you are trading, unless you are entering on the 1 hour chart, then it's likely to be a swing trade. So you need to decide what kind of time frame, what kind of trader are you going to be? Are you going to be a very short time frame or longer, like swing trader that you are prepared to hold the trade for maybe a few days to a week, right?
Okay.
In that kind of situation, you will look at the weekly time frame. You make your analysis from the weekly time frame, because otherwise, if you say I'm going to trade on the 1 hour time frame and then I'm going to enter the trade on the 5 minutes time frame, and then those weekly or monthly, it's not important.
I got it.
All right. So because you will, if you don't decide on the start, what will happen is you will have so many time frame to analyze until you're totally confused. You don't know what's going on, right? Because your higher time frame will be maybe 1 hour or even 4-hourly time frame. But if you want to stretch to daily, it's okay, right? So whatever happened in the weekly and monthly, you can take a look at it, but it should not take away too much of your thought what is happening in the monthly or weekly, because you are intraday trader.
Okay, so I just did it for, I mean, just as a compliance on how your class was structured. So I make it a point to get that view from the monthly, so that I have a better view of it. But point taken. Probably on a daily basis, I just have to look at H4.
Yeah. You should focus on either on the daily or H4 or even 1 hour, and then just take it from there.
Okay, I got it.
Yeah.
All right. So in this case, so I'm on the 1 hour time frame and looking at the trapped orders uh, from previous time frames. From for so I think it goes back to this to the H4 time frame where I saw some gaps
Yeah,
here and there, and there's this I don't know, trap orders at this level,
yeah,
right? So at this point, my our bias is still an uptrend,
mm,
right? So I'm trading with a bias,
yeah,
uh, but so I'm now looking for a um, a point where I can trade when it goes down. Because right now it's an uptrend, so I missed the trade already from that perspective, right? Because it's already going up, so I have to find a level here for me to trade, uh, where where I can wait for
yeah. So
the
what I would
price.
suggest you to do is you go to your 4 hourly time frame. Okay. Now identify what is the range of the 4 hourly time frame. The range of the 4 hourly time frame. So you can see the okay. Let me have the control. The
Okay.
range. This is the current price.
Yep.
Where's the range? Can you define where's the range? 4 hourly time frame.
So for hourly time frame,
Where's
this
the range?
uh, so this one, the thick line here.
No, that's wrong. Okay. Now, when you look at any charts and you want to determine what is the range. Now, in this case, we can see that it is in an uptrend, right? Market
Right.
continue to make a higher high, higher low. And we can also see that the most recent lower high. Where's the most recent lower high?
Most recent.
From the higher time frame. That's the most recent lower high. This one. You see my cursor is pointing?
Sorry, can you? Yeah, okay. All right.
This is the one.
Yep.
This is the most recent lower high.
Okay.
Okay. So now we can see that the current price in a 4 hourly time frame already took out the most recent lower high. So we are in a bullish mood, right? Yeah, in
Yes.
a bullish bias. The order flow in this time frame is up. Okay. So we then decide where is the current price. The current price is of course the current price will make our high. This one.
Okay.
Okay. Then the second thing we're going to determine is where is this origin? Where is the source that break this lower high? So this is your 4 hour range.
Yeah.
Okay. So if you're going to trade on a 4 hour range, obviously you're going to wait for price to pull back all the way, maybe at least this level lower than 50%. Then you start to look for a potential long, right? So that is if you look at the 4 hour as a time frame. But if you are looking at the 1 hour time frame, as you mentioned just now, then we go to 1 hour time frame, right? Now in the 1 hour time frame, you will do the same thing what I just showed you. Where is the take the from the current price? We can see that this 1 hour is a bullish bias. Market is moving higher because we can see that it is higher high, higher low. Now, the next thing we want to find out is where is the most recent high that's being taken out, which is the same high, the 4 hour high. Can you see?
Yep.
It's the same, right?
Yeah.
So this is the high that is being taken out, the most recent high, before the price make a higher high. Now, the next thing is we need to find out where is the origin that took out this high. No, the origin is this.
Okay. Right. Okay.
You see the price actually move lower.
Right.
Now, if we zoom in a little bit,
yeah,
you see this from here. You see the institution sell.
Right.
It took out all the stop loss here.
Right.
And it moved higher. Then again, one more time, institution sell one more time, took out the low here. So where is the origin that took out the high? The origin is this one.
Yeah, that one.
So now we have this is
so that's the range.
1 hour range.
Okay.
So if you are looking at 1 hour for entry to long. Now, and then we say that we like to go, if we want to go long, we want to go long where the location is as low as possible, right? So you know that you're going to wait for price to move lower, around there, approximately there, 50%. And we can also see that there is a gap here. Can you see there's a gap here?
Yes, right.
Right. So this gap is going to be acting like a magnet to pull the price
Down.
towards it.
Yeah.
Okay. So we know that likelihood the price will come there to fill that gap. Then also we can see that this trap order, this double bottom, can see. Now when we say double bottom, it doesn't have to be exactly double bottom, right? As long as it is about there, we consider this is a double bottom.
Okay.
So we know that below this, there are also a lot of stop loss, the sell side liquidity. And then beside that stop loss, we also see this gap.
Yes.
Not yet filled.
Not yet filled. Yeah.
Right. So after that, we also see this trap order, which is so obvious.
Right.
And has not been visited at all.
Right.
Right. So there are two potential. Immediately, I can, based on this, I can see that market can come to this area to fill this gap, right? And then it go higher. Or market can, from current level, go all the way down to fill the second gap, right? And unlock this trap order, then move higher. Third one, market can just go down, take out the gap, and then start to move higher, and then start to go through a phase of distribution, and then break and come and pick this one and then go higher. So immediately, my mind will have these three different scenarios that price can potentially move. You understand what I mean here?
Okay.
Right? We do not know where the price is going to move, but I can foresee that if my bias for this pound dollar is up, these are the different scenarios that potentially can play out. Of course, the other scenario might play out is the price just continue to break higher. Then in that case, whatever we plan here is no longer valid.
Right.
You understand, right?
Yeah.
So these are different three different scenarios that I play out. So right now, what I do is I just wait.